Hello and welcome to Average Traders. It's been a crazy couple of weeks and we just had earnings for some of the big guys, Apple, Amazon. Rajan, why don't you just give us a lowdown?
Yes, I mean, it's been, we've had the big four all reporting earnings this week. Yesterday we had Facebook, or Meta, should we say, that was up about 18%, which sort of helped lead this big rally that we had today where the NASDAQ closed over 400 something points up. And then today, then we had Microsoft, which was a big winner, up 7%. Google was a loser this time, and it was down about 3 to 4%, but it's pretty much made it all back now. And now we had Amazon. Amazon, wow. Rivian, they took a huge hit on Rivian. So just looking through the Amazon earnings right now, they took a huge 7.8, I think, billion accounting write-down for Rivian. And so they guided light for next quarter. So, so missed on both the top and bottom line, and Amazon shares are down like almost 9%. You know, so it's been a bit wild.
Pretty crazy. But with Rivian, it's a mark-to-market accounting issue. So in reality, they're obviously way up on their Rivian investment, but obviously this is just something that brings it down. But what's really noteworthy is that this has been the slowest growth for Amazon for the last 20 years. So this is
what
where
happens,
everything.
This
you can't keep growing forever. But we've seen it
when you've got $116 billion in revenue. So this quarter, Q1, which literally 3 years ago in a Q1 they'll be doing 60 billion, 70 billion in revenue. Now it's 116.4 billion. So the thing is, it gets to that point where when you're getting into hundreds of billions, you know, that growth rate, and then that's just naturally why these, you know, they hit a floor around these sort of valuations.
And then this is what happens unless you find another growth S curve to kind of ride. Your valuation is going to kind of languish. I mean, obviously we've seen it with Netflix. I think with Facebook, as you were talking about, they're up, and I think why they're up is that, you know, they haven't lost monthly active users, right?
Yeah. I did see an analyst note that the Reels are now becoming a good competition for TikTok. You know, another copied feature, but they're actually doing it quite well.
Yeah.
So
and also, if you look at YouTube, obviously that was the kind of dent to Google's huge, colossal growing earnings. I mean, it's still an absolute mega beast, and it's growing. It's crazy.
Just one thing to remember when you actually look at the raw numbers. I mean, Amazon, right? $116.4 billion in revenue. But the thing is it's fine margins with these things. You miss by 10, 20 cents, 30 cents. Sometimes to justify these high valuations, you've got to be beating it out of the park. And when you're missing, it's, I mean, to be honest, they didn't even do that. They didn't even beat estimates in the last one, but they had to stop buyback. And I think the way the stock acted before the earnings, sort of, it helped Amazon go up. So, I mean, it's pretty much, you know, but
the thing is, Google is still growing, you know, at a 20% clip. That's the major thing. Whilst Amazon, it seems only the AWS is.
I'll be honest with Google. If they can just sort out that Pixel phone, like I wanted to buy that, but so every time they come up with a new phone, there's so many teething issues, so many little problems like this and little problems like that. Like if they can sort of really get a handle on that and then really grow their hardware business, boy, Google. You know, there's a long way to go, but that's why I bought the dip yesterday.
Yeah, of course. I mean, with Google, revenue isn't ever going to really be much affected by the Pixel. You know, it's mainly about, you know, what they do best, which is advertising and data, basically. You know, they're an AI machine, and they're just such a phenomenal company. Nice one for buying the dip yesterday.
I mean, to be honest with you, it's not really skill that buying dip. Like you could have just bought the NASDAQ and now would have been a dip. And the thing is that there's been plenty of dips to buy, but the point is, then there's also the dip you bought where you were onside, like the last one. We bought the dip, you're onside, and then you're offside. So the question is, did you take the profit or not? And if you didn't take the profit, then you're even more offside. So the dip is only, I mean, it depends on your time frame, but I think with Google, Amazon, it looks like all of them, they're all doing this stock split. And so the question is, people bought onto, can you believe Google announced their stock split at 3,000? It went to 3,100 and then went below 2,300. So you're literally almost 30% off the high. So if you bought it thinking it's going to have the Tesla effect on the buyback, quite clearly you got screwed over.
Yeah, I think every major company that has announced a stock split recently, you know, haven't had the the big effect that they wanted.
Because the problem is they didn't do it in a rampant bull market. They're doing it in a jittery market where they can see past the ruse, which is a stock split. More. So
and also the money that reacted to that last time, a lot of it has evaporated and left the market. As you can see with the Robinhood, absolutely got trashed.
Oh God.
Yeah, it's just insane. I mean, the thing is, they're at 15 million monthly active users now. Which is crazy because my app has 1.5 million monthly active users, and it's just a tenth of Robinhood. And
Robinhood. The problem with Robinhood, we talk about Robinhood. The thing about Robinhood is that it got the wrong clientele. Their main claim to fame was to get all these meme traders, all these new guys, and stuff like that, and not like, for example, I've been trading since 2003. I haven't even looked at Robinhood to open up an account, and realistically I look for an account which is not full of fairies and when you put on a trade and stuff like that, you look at just serious accounts. And the thing is that for a broker, and you look at the old stalwarts like Schwab and I really like Tastyworks as well, Interactive Brokers. You've got the real people that do trade and trade seriously, whereas Robinhood, I think, attracted a huge base of all of these newbie traders, and then they realize they're too hard. It's quite difficult. And how many newbie traders that all traded during this whole pandemic period, how many of them are trading now? And the problem was that was Robinhood's main base. So this is why they have the problems, in my opinion.
If everyone made money like they did in 2020, 2021, it was the time that the casino was kind of flipped. But, the casino always wins in a way. So it was just a matter of time. And now, a lot of them are out. Well, this is the market right now. I mean, with Apple, they absolutely just phenomenal. What a company. Steve Jobs' legacy, iPhone absolutely killing it. I think in the last quarter, they returned almost $27 billion to shareholders. They
just announced a $90 billion buyback and an increase in dividend. So that's what, this follows on from Google's $70 billion buyback. Mm-hmm. Amazon announced a buyback in the last quarter. The thing about all these guys, they have so much cash. And so Apple's got all this cash. The thing is that now, actually, with rates going up and all that cash just I guess it's just what they do, 90 billion. Let me just share a screen, and this is just basically some of the earnings that have just happened right now. So just to go over it, because it's literally happening as we speak. Amazon just reported about an hour ago, and if we look at the Amazon earnings, they had their operating income fell to 3.7 billion from 8.9 billion last year, and their margin almost halved. But one thing that is apparent, and that's the same as what was with Microsoft with their Azure, is that their cloud, their AWS unit is still killing it. Their AWS net sales 18.4 billion, up from 13.5 billion. So all the growth is still happening in that AWS unit. We were talking about Roku. That was mixed. It's not that bad. I look up what that's doing. Robinhood, we've seen, is down 9% after hours. They reported a loss of 45 cents, and then revenue was also a big miss. And they no longer intend to provide revenue outlook, but remains on track with its 2022 roadmap. And then you've got your monthly
Roku's up about 4% after hours. It was up 8% today.
So Robinhood's monthly active users, like you were saying, 15.9 million. That was down 10% year on year. But what's more important is down 8% quarter on quarter. So this last quarter, in terms of the way the market has pretty much resulted in most of their MAU decline has happened in this last quarter, which has been the most difficult quarter from a trading perspective, for a long time. So there you go. That sort of shows what the clientele is over there.
It'll be interesting to see the other brokerages, right? What are their declines as well? Because Robinhood is very meme stock friendly, but I'm sure all the rest of the guys, even with us average traders and even the pros, a lot of them have been suffering big losses, over the last couple of months.
Oh yeah. It's, unless you are day trading and you've been playing these markets quite well, or you've got shorts. But even if you're short, how long have you been holding the shorts? It's been a really, really, really difficult time to trade, and I don't think many people, especially if you're long, I can't imagine anyone that's up money. But I'm sure there are some, as always. But
all you need to do is listen to Chamath in his November all-in pod. He forecasted it. He knew what was going on, and still.
But just go into this Apple. Just looking through these numbers, they reported $1.52, which was a 9-cent beat, and revenue was also a strong beat. Like I said earlier, $90 billion increase to its share buyback program, and they raised the dividend 4.5%. But if you look at where the revenue was derived, it was iPhone sales, which was $50.6 billion, which came in ahead of consensus. The iPad sales were down. Their wearable segment was slightly up, but missed consensus. China was only up a little bit. Their services revenue always that increased, but basically it's the iPhone revenue which really propelled this quarter. So and then Cook also notes that the supply constraints were significantly lower in Q2 than in Q1. So that's helped a lot of the supply issues with Apple, because they did note in the previous quarter that they did have quite a bit in terms of supply issues. So there you go. So Apple was up about 2%.
Supply chain thing, obviously very, optimistic now. Hopefully everyone else is getting their things into shape. I noticed in the automotive sector, they're still complaining about chips. Obviously Apple are a masterclass in operational efficiency, and we hope that Legacy Oil
it just shows, even with these numbers, Apple is now flat. Amazon is down 9.3%. Robinhood is down 10%. Pretty much everything is down. It looks like Amazon really set the tone for this earnings. Roku, up 4.5%. But I'm looking at all of these stocks after hours are all pointing down. But that's just see how it turns out tomorrow. But I mean, if Apple can't stay up on the, my one fear going into these earnings was Apple was up 4.5% prior to these earnings. So a lot of it was already baked in. Amazon was up 4.5% as well, and clearly is down 10%. So,
So this is the thing now. Look, you have to look at it. The market's only rewarding profitable growth at the moment, but not even that. Look at Tesla.
As a Tesla holder, Twitter. Do you think it's a distraction? As a holder, there's two aspects. You can always. One thing I've noticed a lot is that everyone will defend whatever, especially Tesla holders. Elon Musk can get a baseball bat and hit the president on the head, and the Tesla holders will go, but it's Elon, he's justified. There's a lot of everything, but there's a lot of defending him because he is the face of Tesla and obviously everything it stands for. So, but what is your take? Firstly, in terms of the Twitter deal, and then second of all, how do you think it will impact the running of the company going forward? Obviously, Tesla has reacted on the back of the fears that the collateral that he needs to buy this will be pegged to the Tesla stock. And if Tesla keeps on going down, he's going to have to put up more Tesla stock as collateral. I think the number was around 560. So if Tesla gets around 560, then potentially it could be an issue. But I mean, definitely. What's your take?
Well, on your first point about, Elon getting away with whatever with Tesla, Tesla bulls. Yeah, I actually agree with you there that he does have this hero complex. But I guess with him, because his heart's in the right place most of the time, in terms of his overarching mission, he's rallied a lot of people behind him. And I think that's one of his core strengths. So there's a lot behind that. But now let's get into the Twitter purchase. It is actually a win for free speech. And, I think Elon he's overpaying a lot for Twitter. It's even more expensive than Tesla in terms of their PE. And obviously they announced earnings. But the reason that they probably took the deal is because they kind of looked around. They thought they could get some other interested parties, but probably the ones that do have deep enough pockets don't want to take it on due to either antitrust or, they know that they're not going to really make much money out of it. And
I think a lot of these holders really pressured the board, because the board initially, I think, were going to take what do they call it, the red pill or the blue pill, like the poison pill. But I think there was a lot of shareholder, because the thing is that realistically in this market, Twitter could have easily gone sub 30, and here we go, there is 60%, the takeover price 60% higher. Yeah, 60% higher. So it's like, just take the deal, and we're out.
But they know it was a fair deal, and Elon, in a way, it just shows his power, because he said, "Look, this is my last and final offer." And, when people say that and they really want something, they have a little bit extra in in the reserves to maybe one up a little bit. But this shows that Twitter was in such a weak position that they couldn't even eke out any more for him from his offer. That kind of just shows a lot. And there's some weird clauses that the current CEO of Twitter, if he gets fired, I think he takes around 40 million as a
I think he's going to be
package.
trying everything to get fired now, isn't it? And then he can just live the good
Exactly.
life. Fire me.
Yeah. Well, if you look at the pace that Elon runs his companies, I think there's going to be initially a lot of change that occurs, and I think people who have been very cushy at Twitter, if you see the pace of innovation at that company has been very slow up until, I guess, relatively recently. You get a few new features in the app in terms of Twitter Spaces, and a few new features come up. But before that, it was very kind of stagnant in terms of the platform. And yeah, Elon's style is, he rallies all the employees under a single kind of mission. And the mission for Twitter will be that, it is the town square, and it has the mission of, protecting free speech, but within the laws of a specific country that they're operating in. So it's not going to be a rampant free speech for all. It's going to be something along the lines of, just what the Constitution protects, because the Constitution doesn't protect all free speech. It's only, there's
remember, what's the definition of free speech? That's the thing, because people just brandish around free speech as free speech. I mean, you can just say whatever you want.
No, but you can't say it. But you're not even if you were speaking at a town square in a physical space.
No, of course.
If you're brandishing hate speech, or you're causing harm to others, that's not tolerated. So the thing is, the societies that we live in dictate the rules of what should be and should not be free speech protected. But the thing is, Elon believes so much in this issue, and so much censorship has actually been occurring recently, censoring COVID news, and not even news, just people talking about it, just having genuine discourse. During the pandemic, people were censored, and that they've turned out to be right. The main thing that I really like about what he's going to be doing is kind of going into Twitter, open sourcing the algorithm, and really creating a whole bunch of transparency where there hasn't been any in terms of the Twitter algorithm. And when there is censorship taking place, then it will be hopefully a lot more transparent in terms of the algorithm has detected that this violates the law, and this is the reason that it's been taken down. Or if a human had to get involved, it will list the reasons behind it for a deleted tweet. So this is what we want. And if we look at all other social media networks, they are all dictated by a closed box algorithm, as Twitter is today. And there's a lot of shadow banning and a lot of hiding of certain things that it should be out in the open.
Yeah, I think in theory, a lot of what you're saying is right, because the way you're saying it, and I mean, this is just taking the other side, playing devil's advocate. Yeah. Like, you go, yeah, he will do this, he will do that. The thing is that all makes sense if you're trying to improve the car, you're improving this, you're improving that, like, some type of product where it's more of a binary outcome in terms of, okay, I do this to change this algorithm, do this, and this will improve the efficiency of a car, or this will improve the weight, or this and that. But with this, I think that Twitter's already, in a way, is a phenomenal platform, but at the same time, it's one of the most toxic platforms out there. And now he's really just jumped in there with the sharks. And the thing is, he will do all of this, but it's one of those things where you can never please everyone. And the amount of vitriol, and you can already see it in the tweets he's doing. And he's like, he's trying to defend certain things. He's trying to put, he's doing things showing, because the amount of abuse and praise he's probably getting. Now, the question is, mentally, how well does he deal with it? Now, so far, I'm sure he's got a lot of flack or something, more this and that. But now that he's the head of it, and everything that happens at Twitter, and, let's just say there's another insurrection, but he doesn't take the action, which most people would think, well, look, these guys cause another insurrection, or, whatever you want to call it. And he's like, oh, but free speech. How is he going to deal with that? And the amount of abuse and pressure, governmental this and that, to stay true to his core value. And then not about how is it going to affect his own personal psyche in a way that he just doesn't lose his mind and just like blow up. Okay, I think no one knows, but that's what I wonder.
So let's just say, if you look at the concept of democracy is like giving power to the people, right? And I think that's what he wants with Twitter. And I think that if in that specific scenario that you're talking about, that edge case, it's always, useful to think about edge cases, and in that one, then I mean, hopefully by then it would the algorithm would have been open sourced, and everyone can kind of see, hold on a minute, the platform is supposed to act this way. And the only time it's really going to get controversial if the humans have to come involved, and then it's about opinion and rather than fact. And then again, that's where the waters do get murky. But if it's done via algorithm, then everyone can see it. And if there will always be mistakes, but at least they can take that and say, okay, in the future, we're going to update the algorithm to do this, that, right? And to basically give the power to the people. I think that is what's going to make Elon's platform better. But again, the proof will be in the pudding. We don't know.
Yeah,
this is what but the thing is, with Elon, usually what he sets out to do, he kind of delivers. He said, I hope even my worst critics remain on Twitter, because that's what free speech means, right? And so when he's talking about that, and I think, you look at his personality, you look at the actions he's taken. Yes, he does troll a bit of about, the times, but when it comes to doing the right thing, pretty much you can see most things that he does, apart from a few little tweets here and there, he does for the right reason. So I think his heart's in the right place now. Let's see. He's not in a world of one, and he doesn't hold all the keys. Other billionaires own a lot of the other mainstream news outlets, Washington Post, Jeff Bezos, and people who are crying about Elon really having access to this platform to be able to buy, and it scares them. Just needs to know that it was already in the hands of some billionaire founders, as well as BlackRock and Morgan Stanley.
What was funny is that if Twitter took actions before, no one would say, "Oh, it's Jack Dorsey," it's him. But now, and it's going to happen.
Yeah.
Any on the fence action by Twitter, it's Elon's fault. It's Elon's fault.
But as long as I really hope he does open source the algorithm ASAP and say, and keep on, and all the attacks that he has against him, like I was mentioning earlier, he really just brings it back. Okay, how can we tweak the algorithm? Let's make it a community thing to own. And if he does, because that is how town squares operate. The community owns it in a way. So obviously he holds the keys, and hopefully he just gets the right. I think the only way he can actually fund this, with the debt that he's going to convert in Twitter, is by laying off half the workforce. So you can understand a lot of people who work at Twitter currently. It seems like, they're obviously scared to lose their cushy jobs. And it seems like Twitter is quite an inefficient organization. If you see, what they actually offer as a platform, does it need that many employees? Maybe they only need like a couple of thousand, maybe 3,000 people to run it. It seems like a lot of bloat. I mean, if you think at the services that Facebook offer, WhatsApp, Instagram, there's so much more that it actually does compared to Twitter's much more simple offering in that regard. Again, I don't think he's going to be making much money out of this. And if it is privatized, then the guys who come in, I don't know if it would ever go public again. But again, if it is public, then it's at the whim of potential large organizations who want to sway how it runs. So I hope it stays private, and whoever goes in there has to go in eyes open, knowing that potentially it will never go public again if it stays under Elon's stewardship.
Yeah. Well, I mean, it's we'll be watching this space to see how it all develops over the next year, and the impact it will have on Tesla share price, because obviously, like we mentioned earlier, the loans, the collateral to pay for this acquisition is obviously loaned against his Tesla shares. So I mean, that's why Tesla's been hit.
And I've been feeling it as a Tesla shareholder. Some of our the puts that I've had, well, I don't have too many sold puts because of you, Rajan, but they are not doing as well as they would be. Just on Monday, what looked like short bets have turned negative. But again, with Elon, you have to take the good and the bad. Well, I guess with any, if it was with Amazon, right, you just have to take it. The market dictates the price.
That's the biggest thing. What we've seen, it's the markets are brutal right now.
Yeah.
They punish. I mean, this is the difference between let's not just call it not a bull market. I mean, little misses and you just get smashed 10%. And I mean, we saw Teladoc 50%, or no, whatever it was. A Cathie Wood's Arc, all of her stocks getting butchered. It's just it's a brutal scene right now.
Yeah, definitely. And if you look at even Amazon, now down 12%. The 2.5s is just it's a real tough time for long investors. However, in these markets, this is what people have always wished for. At the top of a bull market, they're like, "Oh, I wish the market crashes so I can buy cheap." Yeah. But then, when it's in this, the fear takes over. Now, we have to. If you do have some dry powder sitting on side, I would definitely recommend, deploying a small amount, whatever you feel comfortable in. Into some of these stocks,
because I think people have been deploying their dry powder for the last month. Like, in fact, this month. Today we had a strong rally, but before today, in August, April, we were down 12% for the Nasdaq, which is actually the worst performance since 2008 or 2009. So it's been about 13-year worst performance on an index level basis. So it's been pretty brutal. And so far, it looks like tomorrow's not going to be good. You don't know if it's going to turn around, but after hours action suggests that we're going to give back a good chunk of what we made up today. So
100%.
We'll see.
Let's just talk about conspiracy theories, right? Now, the governments all around the world printed a huge amount of money, right? Now, if there had to be certain actions that they had to take to limit the feeling of wealth for a lot of people who had obviously had outsized gains, and to try to mitigate the effects of the huge amount of inflation that printing 30% of the dollars in 1 or 2 years. Would this be the actions that they take to rally the big money to exit?
This was all predictable. Everyone knew it was going to happen. Everyone knew the Fed was sleeping, and they go, "Oh, this is transitory. Oh, this is transitory." But we could tell that this was much more systematic. So the whole point is, everyone knew this was going to happen. But what happened is there was just so much momentum, and then until the Fed just started pointing it out. And I remember when we started it off at the beginning of this year, I said, we'll have 4. I can't remember exactly what I said, but I said we'll get to 1 and a bit. And then you said, "No, I don't think they're going to raise that many times." Yeah. Now the neutral rate is 2.5%, 3%. Yep. The guys are talking 2.5%, 3%, which is 10 rate rises in terms of quarter basis point hikes. So the thing is that the expectation, the Fed is going in aggressive. Now the thing is they went too soft, they're too accommodative initially, which helped this massive asset bubble. And now they're going too hard. This is...
But who has made the money out of this? I mean, I'm just saying, if you were the big money,
Fed, because what happened? These Fed members were then they had to sell out of everything because they couldn't trade this market. And what is a coincidence that they all sold out at the absolute high?
Yeah, exactly. They can't have everyone too rich, right? Anyway, let's just get away from this.
But the point is it was coming in 1999. Yeah. The thing is that everyone knew it was a bubble, but the thing is, people. You get out, you try to short it. It's just timing is just so difficult. And the thing is that every time I've been calling for things being over, Shopify, for example, Zoom, I've been saying it for, how can it be $1,000 for Shopify, $1,200, $1,500? Now it's $400. But the thing is, if I tried shorting at 1,000, I would have had to take $600 worth of pain before I was right. It's just so hard to just, get the timing correctly. And so that's why, people you've got to stay solvent for, you can be right, but you have to remain solvent. And the thing is that I've been saying this has been a bubble for the whole of last year. But, if I shorted early last year, I'd be killed. And, if I just happened to wait till November, then it would have worked out. And even if I did, how long would I have held it for? I don't think there's many people that were shorting it back then that are still short now. Maybe there's a few, but it's very hard.
But that's assuming that you actually want to bet against the market, but, betting on the market at the right time. Instead, buying. Yeah. But I guess, in the Jan,
I think the easiest play was buying bonds. But the thing is, retail don't really trade bonds that much. But with the yields the way they were, and you knew inflation was in the horizon. If you just sold bonds, or you sold the future, you were laughing. That was the real play, because that was the most easily correlated play, because stocks can still be a bit iffy, but in terms of a pure inflation play, sell them bonds and you were laughing. But
okay, so now let's not talk about what could have been. What are your actions going ahead? Like, how are you playing the market? What are you doing?
So, you can see from my portfolio, the one that I share, the average trader portfolio, I've got much less positions, just playing it a bit more smaller. To be honest, I'm just trying to see if I can call a few of these bottoms, but playing them low risk. I think right now it's the same strategy that applied before, that, edge into them as they go down. Like today, I bought fractional small amount of Tesla as it was going down. And then if we get to 950 to 1,000 again, I'll just sell them out again. And then I just, because the thing is, I might be totally wrong, but I don't see a rip-roaring rally it was anytime soon. We
100%.
Might get it towards the end of the year. We might get a proper Santa Claus rally towards the end of the year. But for now, I do see chop. And so in that regards, I've got, like, if I have a core position in something, I'll be skimming in, skimming out, like around the edges, and just keep a core amount on. And so that's what I'm doing. To be honest, trying to just jump in too much where it is still difficult, because as we have discussed before, on an index level, markets are still in the 4,000, 4,200, 4,300. And so, energy is still very strong. So if you were just playing the S&P 500 as an index, you're not really feeling the pain that much. If you're actually playing dividend funds, dividend ETFs, you're not really feeling that much pain. But if you're in a lot of these retail stocks that have been smashed, that's where you're really feeling the pain more than anything else. Basically, 100%. Tech, that's what you get all attracted to. That's what you've been messed up. But, if you're a retail guy and go, let me buy some oil and let me buy some, XOP and energy and this and that, then, you're laughing. So, so it depends on the index. I mean, it's hard for me to buy oil. In fact, I think these delta neutral plays are the best ones. Just playing the indices, doing it delta neutral, but just keep the risk, just don't trade too big. That's my philosophy right now in this market, because you just don't know where the bottom is, and just keep on skimming in. And then that's, what about you?
Yeah, I mean, I guess the only thing I've really been doing is just playing a few small sold puts. I had some 890s that expired last week. And this week I've got a 900, which, it depends on how it actually plays out. I have been nibbling on Tesla shares because that's just what I do. It's silly. But again, for me personally, I'm taking a similar type of play in terms of Amazon having Amazon Prime and the amount of revenue that generates. And I'm just talking about how FSD is going to be like the Amazon Prime for Tesla in terms of just a renewable software subscription, where instead of packages coming through, it's going to be miles driven. And obviously that's been the dream for a long time. But again, I'm accumulating on the dips just with that vision in mind. We'll see if it pans out the way Elon has been talking about. And obviously there's Optimus, which is, if it does come to fruition, I believe it's going to be like the most innovative invention humans would ever come out with. And I guess these are grand visions, and we'll have to see if they can actually execute them. But for me, it's just too much of I think like the risk reward is just so skewed to the upside. In the future, I'm not saying it's going to happen anytime this year or even next, but that's why I accumulate in these times. But the thing is, in terms of other trading, I've just been actually closing out some other long plays that I had. I had some Foot Locker on, and I think it went up a lot, and then I didn't sell. But now I think I just closed out at like a 5% gain or something like that. I closed out some MP Materials, closed out of that position. I think I was up 250% or something like that on that one, so I just closed out a bit, just trimming down some of the winners that I don't have that much conviction in, and just try to consolidate the portfolio a bit, because I feel like I just had too many distractions when I look at my portfolio in terms of companies. So I just wanted to bring that down. Yeah. But in terms of future plays, at the moment, I'm not really doing too much. And maybe just ride out the market at the moment.
Well, yep. So let's see what now happens over the next few weeks. A lot of catalysts still going on. That could impact these markets. We had the Fed. I can't remember when the Fed is, next week or something, but we're going to have all the new round of rate decisions. So we're probably going to get 50 basis points.
What do you think about when Jay Powell, came on his recent thing and they accidentally said 0.5%? The lady that was sitting next to him.
I think it's pretty much certain they're going to raise 50 basis points, right? It's whether it's 75, but I think it's going to be 50, especially with this GDP print today. We actually had negative 1.4%. But although they're saying the components will iron itself out, but, technically gone into in the last quarter, we were in a recession. Well, it has to be 2 quarters, before
yeah.
it can be classified as a recession. But I think with that, and if it's doing its intent, the Fed's only raised once. So the thing is, if it does its intended thing, things will cool a bit. And obviously the comparisons for CPI as well, like we mentioned before, it's going to be, you're not going to see an 8% because the comparisons are going to start to become a bit easier. So, yeah. But
I guess the only thing about the recession is that Meet Kevin had an interesting analysis. Is that there was fears of getting into a recession, but we're already in one now. So so if we're actually going through it already, it's like, oh, okay, wow, we're already here, and now it's just about timing the bottom. But we'll see. We'll see how it is.
We'll see. I definitely do think there's some absolute beaten down names. Question is just when. My little outsider money line's now 190. Free for all, but we'll see how it all goes. But we'll call it there. And
in our next episode, we'll try to go through a couple of stocks that we're looking at that have been beaten down heavily, and we'll try to
we'll do a bit more update on the charts and how the portfolio is doing. But please like and subscribe if you liked what you heard, and spread the word. And we'll catch you on the next one.
Thanks.